Quand t'es prête, Mario.
Okay. Alors, mesdames, messieurs, ladies and gentlemen, bonsoir and good evening. My name is Mario Jolet, and I am the president of MI3 Financial Communication. And on behalf of the InvestorIntel and MI3 team and our sponsors for tonight's event, the Canadian Institute of Mining and Metallurgy, Section Amos, InvestorIntel, the Mineral Resource Analyst Group, we welcome you to this special video conference, Technology Metals Summit 2021. Luc, tu me suis?
Oui.
Okay, and our title for tonight, Discussing the Rare Earth Bull Market. But before we go on, I just wanted to take a minute here to give a special thanks to the mastermind of this video conference, Ms. Tracy Wislowski, a very bright and persistent businesswoman, managing InvestorIntel to the highest level. Tracy, thank you very much for putting all this all together. And before we go on, let me introduce you to my co-host for tonight for this video conference. He has a background as being a professional engineer in the oil and gas sector with 25 years of experience involved in the capital market activities as a sell-side equity analyst, presently active in private and public company as a senior executive role. Let's please welcome Mr. Frédéric Kozak. Bonsoir, Frédéric. Frédéric?
You're on mute, Frédéric.
Oh, okay, sorry. I thought you guys were going to unmute me. Thank you. Thank you, Mario. It's a pleasure to be here.
It's a pleasure to have you tonight with us. Frédéric, I was looking at the title tonight seems to be a very wide subject, okay? But I think it is not, because with the end of the Trump era, the trade war with the Chinese and the reduction of supply from China, we're controlling up to 95% of the rare earth export. I have witnessed a raise of interest for the rare earth over the last 2 years, but also for lithium, graphite, niobium, vanadium, and other metal associated in the EV battery race. And this make it rare earth, strategic and critical metal to be more important than the people think, because they are in the center of our lives. So investors should consider it because there's something going on in that sector, obviously. But before we go to present the presenters, Frédéric, can you give us a brief introduction to the rare earth family for our audience tonight?
Sure. Thank you, Mario. Next slide, please, Luke. I think most of you are familiar with the rare earth elements, or rare earths as we are prone to call them nowadays. You can read on the slides, but there's if you were to do some research as an uneducated, not knowing what the rare earths are, you would find out basically that there's 17 different rare earths, but they are almost undistinguishable, lustrous, silvery white, soft, heavy metals. There's been a lot of confusion over the years as they were discovered, about discovered, defined within the last 150 odd years. As you know, they're broken into light and heavy rare earth elements, and they're typically found in monazite and bastnasite, and can also be found in lateritic clays. Now, a lot of people know that rare earths are found also associated with radioactive minerals, particularly thorium and uranium, and this makes processing problematic. So as we look to the future, particularly in the US and for that matter in Canada, radioactive processing issues are going to pose some potential problems. Now, what is driving and no pun intended, what is driving the market in, or interest in the rare earths is obviously the permanent magnet sector. Now, it's not just the show up in electric magnets, but if you were to pull up your cell phone, you would find that you've got, if you have an iPhone, you've got at least 8 magnets are at least 8 rare earths in your cell phone in the forms of various magnets, and other cellular phones can contain up to 16 rare earths. That's only missing one, and that's promethium, because it's a radioactive rare earth. Something important to note is, why is there an increased interest in rare earths? Well, it is, first of all, technology related. We're all seeing how, we've gone from a few cell phone manufacturers to a bunch, and they are prolific. Everyday materials are demanding rare earths, but most importantly, and this is what really has got the American government's knickers a bit in a knot, is that the military uses related to lasers, night vision goggles, and fighter jets, just to name a few. Next slide, please. This is a very, very busy slide, but I wanted to address the capital markets side of the business, because we've got a shift to outsourcing that occurred in the US in the last, just over 10 years ago. And unfortunately, it has worked too well with, as Mario mentioned, China controlling the bulk of the rare earths, as we all know. So I want to just draw your attention to these two graphs, and I've done price performance plots from July 1st last year. The top left is to the top 5. You may have seen my top 5 list that was published in early January, and the bottom right is the other 6 that I think are most interesting. One of the things I would mention, though, and a lot of people know this, but in the last rare earth boom, we were looking at about 250 public rare earths companies. If you were to go through and count today, you've got
only
somewhere
me, or the entire system is going down?
Sorry.
Yeah.
Today we've got between 75 and 90, depending on how you categorize. Now, I'm following about 26 of them. They're on my watch list. But we've all seen bull markets before. And what I'll just highlight here, you can see the graph, you can see when the different companies started to outperform, but the top 5 literally started to get some juice in the fourth quarter last year. And the top performer, of course, being Australian Strategic Materials, and that is after their demerger from Alkane Resources starting in July last year. But the usual suspects, the top the top 2 companies in the rare earth space, Linus and MP Materials, were the other best performers. What does it tell you? It tells you that there is an investor interest in the space. If you look at the bottom right, you see a little bit more variability, but I think the one thing that's critically important for investors, and that is one of the reasons we're here talking about this today, is there are a lot of companies who are chasing the rare earths. As I said, there's about somewhere between 75 and 90, depending on how you categorize them. North America let their rare earths industry fall apart, and it's probably going to take another 10 years to rebuild it. So with that, there will be a lot of money made in companies that are exploring in the rare earths space. But the big question is discovering, bringing to production, processing, and then of course, turning them into the actual materials that are used, particularly the permanent magnets. Mario, that's all I have. I just wanted to set the tone for us for this evening, and over to you.
Thank you, Frederick. That's going to be, well, I will get back to you regarding the thorium and what happened to one rare earth project in Quebec. Okay. So for tonight, I would like to introduce our 3 guest presenters. Our first presenters will be Mr. Mark Chalmer, President and CEO of Energy Fuel. Welcome, Mr. Chalmer, and good evening.
Good evening, Mario. It's my pleasure to be here.
We're very happy to have you tonight with us. To be followed by Mr. Tom Drivers from Appia Energy. Good evening, Mr. Drivers. He's with us, that's for sure. I saw him before. And thirdly, we will have Mr. Peter Cashin from Imperial Mining. Bonsoir, Peter. Good evening.
Hi, Mario. Pleasure to be here.
President and CEO of Imperial Mining. Okay, after the presenters session, there will be a question session to the presenters, and it will be followed by the panel comment with our moderator. And to introduce our moderator and panel, yes, please welcome again, Frederic. If you want to introduce our moderator for tonight, we will introduce the panel. Thank you.
Great. Thank you very much again, Mario. So, excuse me, you can see Peter's bio up here on the screen, and I'm not going to read from it. You can read from it. His bio is also available on the InvestorIntel website, but I just wanted to highlight Peter is a very interesting gentleman. In fact, I learned when we were talking as we were getting reacquainted last week ahead of this presentation, his love of music. And so I gave him some great but somewhat obscure tracks from bands that we talked about a number of bands, and music in general. So it was a fascinating conversation. So, you know, it's really interesting to learn something different about somebody every day. Anyway, you can see that he's a lawyer, and he's a CEO of CBLT Inc. and very interested in this space, has been a great resource for InvestorIntel. And I think that's really all I need to say, Mario.
Okay, very good. Peter, to you, mon ami, if you want to introduce our panel for tonight.
Probably muted.
Yeah, it's probably. Peter, can you hear us? Otherwise,
Never muted. I can tell you that.
okay. So what we'll do is that we will get back to this section for the introduction of the panel just right after the Q&A session before we go on. So we'll get
Hey,
back.
guys.
There he is.
Sorry,
So you're there, Peter?
my throat was dry.
Okay, mon ami. Okay, we understand. So would you like to introduce our panel briefly?
I would love to introduce our panel.
Go ahead.
Two members of the panel I consider close personal friends, Jack Lifton and Chris Thompson. I've known Jack for I don't know how long. And Jack, contrary to what was said last week, you do not look like Santa Claus. Jack is a world expert on critical metals and supply chains. He may have invented the term critical metals. He consults to governments around the world and is always fun to talk with. Chris Thompson is a mining analyst who's been around Bay Street for a long time. He currently owns eResearch, where he publishes fantastic, high-quality research on mining and other companies.
Awesome.
Johnny, I've only met once. We did a technology metal show together, and I learned a lot from him. He is an expert in the critical metals and had particularly deep knowledge of the scandium space. Terry, with regret, I don't know you all that well yet, but I'm looking forward to getting to know you better.
Looking forward as well here. By the way, I just have to tell you that Gianni will not be able to join us tonight.
I know.
He has a long dinner arrangement in the location he's been hiding away with vitamin D, so he won't be able to make it. So we have to cover for him.
I know where he's hiding out, and I have no sympathy for him. None.
Oh, good. Okay, gentlemen. Okay, everybody. So before we start with the presentation of Mr. Chalmer of Energy Fuel, feel free to use the chat button at the bottom of your screen to answer a question you may have during the company's presentation session.
Before we start, I'd like to ask a question of Fred. Fred, why does scandium get lumped in with the rare earths, but lithium doesn't?
That's an interesting question. And I think the scientists who have, sorry, I forgot to put my phone on mute. The scientists who have established the rare earth, loosely established the rare earth, started with the lanthanide series, which makes sense. And then they lumped in the other ones. So I don't have a good answer for that. Scandium is, lithium isn't, and the experts have made that determination. I would throw that out to somebody who knows the space a little bit better, like perhaps Jack can comment on that at a different time.
Okay, thank
Do
you.
you want to answer that question right this minute?
Sure.
Okay, first of all, Fred, are you a chemical engineer?
Worse, I'm a petroleum engineer.
Okay, yes. Well, the point is that lithium has a valence of 1, and the rare earths have a valence of 3, so they're not even close on the periodic table, and there's no relationship between them that I'm aware of. Scandium and yttrium, chemically are very similar to the rare earths, and so they're frequently associated with them is the point, and that's why the rare earths really briefly originated as if they thought there was one thing, that, because they were so similar chemically, they couldn't separate them. Between the discovery of the rare earths in the late 18th century and the last one was discovered, let's say officially in 1945, when promethium was first made by human means, not by the gods, and so it's the similarity in chemistry of the lanthanides that makes them that is their relationship. Lithium is not related to them, and again, scandium and yttrium always are associated with them because of chemistry. So it's about chemistry here. It's not about anything else. And I see very often, just to say one more thing, that people keep using the term rare earth to describe things like lithium, which is absolutely incorrect. But you see this in journalism all the time. They say rare earths such as lithium, such as cobalt. They mean rare elements, rare materials. Rare earths are the lanthanides.
And they're not that rare.
No,
Yeah.
no, they're just actually, neodymium is more common in the Earth's crust than lead. So but the problem is it's not concentrated anywhere near as much in accessible deposits as lead is. So it's not as easy to recover. And lead is, I don't know, millions of tons a year, and all the rare earths put together are maybe 150,000 tons a year, and
Right.
neodymium maybe 25,000 tons a year. Neodymium is actually produced in less quantity today than silver.
Okay, well, guys, we'll have time to talk about it at the end.
Yeah.
Why don't we get on with the presenters for tonight?
Sounds
The
good.
question session, and then we'll have debate. We have until 12 o'clock at the moment. So, okay. So, look, if you
We're
want to.
gonna take a whiskey break at 9 o'clock though.
No problemo, no problemo. OK, Luc, si tu veux faire le screen sharing avec M. Chalmer de Energy
Ouais.
Fuel, et puis on va démarrer avec la première présentation.
Yeah, you gotta let me in here though. Yeah, just stop my screen here. You can go ahead now. Just click on, okay, it's coming. Perfect.
Awesome.
Okay, well, thank you, Mario, and thank you for the opportunity to present on Energy Fuels, a relative newcomer to the rare earth element space. I'm not going to talk about all of Energy Fuels, it'll take too long, but we are first and foremost a uranium producer, but we're quickly emerging as a rare earth producer, but we also produce vanadium and do substantial recycling. I may make some forward-looking statements. So look at the business theme for Energy Fuels is uranium, vanadium, rare earths, recycling, and having a strong financial strength but I'm just going to mainly talk about the rare earths tonight. We do have north of $50 million cash working capital or inventory, so we have a very strong cash position. Rare earths and uranium, as Frederick said, radioactivity, uranium and rare earths go together. A lot of people worry about uranium and the rare earths. We don't. We love it. The more, the better. And that's what differentiates us from a number of other people that will present today and in the space. And, rare earths fits just perfectly with our core uranium business, and particularly monazite sands, because they're high grade and they're great distributions. I won't talk about the rare earths. We've already gone through that. We know about the dependency on China, but White Mesa is an existing permitted facility that can bring rare earth production back to the US quicker and faster than most people realize. Our business plan is, again, using our existing processing facility. We're not in the short term planning to be a miner, so there is no development cost, there's no long-term permitting, no mining risk. It's only the purchase of the monazite. We're basically trying to replicate what CNNC is doing with monazite in China. And so we believe now there is an alternative, and it's called Energy Fuels. Certainly, most of you are aware that monazite sands with the uranium ore is a byproduct of titanium and zirconium mining. What is a problem for others is our business model and business plan. White Mesa Mill is licensed to do cracking and leaching at this point in time. We recover the uranium, which is significant in some of these streams, and we will be in commercial operation of a rare earth carbonate in the next month or two this year. So I don't think anybody's been able to get to the market quicker, faster than Energy Fuels. And we do plan to, in time, construct a separation facility at White Mesa if we have enough feed, and we hope to achieve that in the next few years. If successful with this first phase of the crack and leach, we believe we're more advanced than any other U.S. rare earth company with processing in the United States. Monazite, and again, a lot of this will be familiar to most of you, but the material that we're securing from Chemours is over 50% total rare earths. It has about 0.2% uranium, which is the same grade that we typically mine in the district. Excellent distributions for NdPr and heavies. Again, substantial differentiator. I mean, you can look at monazite around the world, but even in Australia, people like Iluka, have monazite sands that are north of 60%. You compare that with the basanite, certainly much larger, higher grades than the NdPr, but then it's like chalk and cheese when it comes to the heavies. So we think this puts us at a very distinct advantage. The basket prices, and again, I know the basket prices can be misleading. We've just looked at some of the more common separated oxides. If you look at the material that we'll be securing from Chemours in the next few weeks, it's over 10,000 recovered on a recovered basis at end of 2020 prices. If you compare that to Linus, Solocamps, and MP, it's about 15-20% better than Linus on this basket, value price evaluation, and 2.5 times better than Solocamps or MP materials. So, grade is king. It doesn't matter if it's rare earths, uranium, copper, gold, silver, grade is king. And again, we see this as a differentiator. White Mesa, we're moving very quickly, and we successfully made on-spec material at the end of 2020. In order to go into commercial production, it cost us about $1 million US. $1 million US, and I'll repeat, $1 million US. Nobody has the strike rate in terms of capital as we do with White Mesa Mill, and we have ample processing capacity. And for example, if we were treating 15,000 tons a year of monazite feed. That would be less than 2% of the mill's annual throughput capacity. We also have state-of-the-art tailings facilities designed for 1,000 years. We have about 1 million tons of capacity on existing cells. And this year we should have permits for another 4 million tons, triple lined cells. So again, substantial differentiator. As you know, a little monazite goes a long way. 15,000 tons a year would be about 50% of current U.S. demand. And so, you know, it's all achievable. And we believe we can process, 15, 20, 30,000 tons. We're basically dependent on securing sources of this monazite feed. And as I mentioned before, we will plan to move to separation and possibly metals and alloys as soon as we can justify it. The collaboration with Chemours was a very substantial milestone, not just for Energy Fuels, but the rare earth industry, because the material at Chemours was going to China. And we were able to deflect about 2,500 short tons per year on a 3-year agreement. And it's a take or pay, indicating our commitment and belief that we will be able to process large quantities. And the quantities of Chemours is approximately 10% of the US rare earth requirements. So even though it's a small step, it's a significant step when it comes to rare earth processing in the United States. We also believe, given enough feed, that we will be competitive with China, that we do not need subsidies from the US government or any government, and that we can have margins that are quite robust at existing prices, absolutely, and even at prices much lower than existing prices. Looking at the timeline, since we got in the business, we're kind of babes in the wood, but April 2020, we announced we're getting in the rare earth business. It wasn't long after that we assembled a team of experts, including Constantine, that you all know, Brock O'Kelly, and Jack Lifton. We started making our rare earth carbonate in the lab in August. September, we got an award for the coal-based resources. It's a small award, but it was an award. In October, we produced our first carbonate. And I have a little video here, which, oh geez, I moved. Well, anyways, I'll back up. There's a video on the side here. I won't play it, but it shows the making of our first carbonate. And that was when we moved from lab scale to metric ton scale. And the picture was the first batch that we precipitated. And it was really a very nice product. And then we signed the agreement in December with Chemours. So we've moved at what I believe is rocket speed. I don't know anybody who's moved quicker. So looking to 2021, we plan to start processing the Chemours material. We're looking for other feed. We probably have a half a dozen different groups that are approached us to provide feed to the mill. We haven't signed up any new agreements, but I believe that will be coming in due course. We'll be making the rare earth carbonate at White Mesa with this total of $1 million of capital improvements. We are looking at separation as offshore at this point in time because there is no separation in the United States. But towards the end of the year, we'll be looking at scoping studies, assuming we have the feed, and looking for expanded monazite supply agreements or partnerships of some sort to feed the mill in a reliable basis, looking at ramping up to 10,000 tons of TREO a year or so or greater in due course, moving to separation at White Mesa and perhaps metals and alloys. So we will be on a fast track for all the right reasons. I'll talk just briefly. Our uranium is still our core business. I want to make sure people understand that we're not running from the uranium business. It's also a hot commodity right now and is a critical material. We have more projects ready to go, fully paid for, debt-free in the United States. We have a long history of being one of the major producers. The blue in the middle is our production. This represents about 35% of the uranium production in the United States over the last 15 years. We have a strong commitment to sustainability. We released our first sustainability report in December, and the recycling we've done at the mill is equivalent. The uranium we recycled at the mill would be equivalent to a train from LA to New York and almost back to New York or back to LA over the last 20 years. So we have recycled a lot of uranium at White Mesa Mill. It is a remarkable facility. As I said, we have about 45 million of cash working capital. That 45 million is valued at $23 a pound uranium and $5.37 for vanadium. At current market prices, our cash working capital is north of $50 million US. So really, in short, we're kind of a unique play. We're moving quick. We're focused. We're going to get there. We're going to get there quicker than people think. I think that it's a potential game changer for North America. With what we're doing, we're just replicating what the Chinese are doing and using the existing facility. And we can do that at very attractive capital costs. And we think, again, we want people to watch this space. Meanwhile, we have uranium. Meanwhile, we have the vanadium. Meanwhile, we have a strong balance sheet, and we're very well positioned. That's my presentation.
Thank you, Mr. Chalmer. Just have a small comment. From last Thursday, the stock was 554, and today, on the 11th, trade at 762. So that's a $2 something. How do you explain that?
Must be a great CEO. Must be a great CEO.
Keep doing what you're doing then.
Well, look, we're latecomers to the market, and but we're doers. We're doers. We've got a long history of doing things and working through things. I mean, we have to promote a little bit, but we're doers, and I think people are catching on that this focus on monazite sands is a good place to go, and particularly if you can handle the radionuclides. And as I said, the more uranium, the better. When everybody else is turning their head to it, we're saying, bring it on, bring it on.
Thank you very much. We're going to move to the other presenter, Mr. Tom Drivers. Thank you, Mr. Chalmer, for the presentation. Peter, you have something to say?
Can I ask a question?
Do you want to wait at the end after all the presenter?
I don't wait very well, but okay.
Okay. If it's a question that's going to have a short answer, feel free to go for it, Bonami.
Okay, it is short. I was talking to Birks Bovaert and giving him grief about this. Why did you choose to pay off $10 million of relatively low interest debt ahead of the due date?
Well, you never know what's in that box of chocolates. And, we had the capacity. We thought that there was an overhang. I mean, who would have expected that the share price would have tripled in the last, month of the year? The move up in our share price really didn't start to happen until about the 1st of December. So, we had the ability to pay it off. And so we decided to pay it off. And so it's behind us. A lot of people are rolling over debt. So look, you never know what's in that crystal ball. And, but I have no regrets. We dealt with it, and we're, debt free, and we're ready to rock and roll.
Thank you.
Awesome. Thank you. Merci. So we're gonna, I want to remind everybody, if you have any question for Mr. Chalmer in the Q&A session, you can answer them directly in the chat. Either me or Frederick will get back to Mr. Chalmer once we'll do the question and answer session. Now we're gonna move up to Mr. Tom Drivers, President and CEO of Appia Energy. Mr. Drivers, you can unmute your mic, please.
Share my screen, I guess.
Yeah, please.
Yes, share your screen also.
Hey, not me, please.
Perfect. Whoop.
La parole est à vous, Monsieur Drivis.
Yes, sir. We
Thank you.
finally got it. Tonight I'm going to talk to you about Appia Energy. Appia is a technology metals company. We're exploring for high-grade critical rare earths and uranium in Canada. I'm going to be doing making some forward-looking statements. So please be familiar with that. Now, Appia's primary focus is the development of its high-grade critical rare earth project, about 35,000 acres, 100% owned Ossis Lake project in Saskatchewan, Canada. Appia's goal is to become a major producer of high-grade critical rare earths in North America. And we think Appia shareholders will benefit from the increased demand of critical materials for new technologies such as electric vehicles, windmills. The Ossis Lake project has some of the highest grades total rare earths in the world, with grades up to 49% and average grades of 16.65 weight percent total rare earths and about 3.85 weight percent critical rare earths. And the zones that we have so far are on surface or near surface within 10, 20 meters. Two of the world's major rare earth producers, MP Materials, has a $5 billion market cap, and Lynas has around $3.3 billion US dollars market cap. Appia has a market cap of 40, I would say 40 million US. So we see a lot of upside and potential for the investors if we were successful in getting Appia to the development of Ossis Lake. So far, Appia has discovered about 74 rare earth and uranium bearing surface zones and occurrences over 45 kilometers on this Ossis Lake mineralized system. And we have basically drilled less than 1% of the property. So we see quite a bit of upside. So, and for this year, we've got a multi-million dollars drilling program and exploration program. You can see a map here of the Saskatchewan, the Athabasca Basin, north of Saskatchewan. We have 3 uranium properties to the east here, and tonight we'll be talking about the Ossis Lake, which is a property about 30 kilometers northeast of Uranium City. And Uranium City is a town, a mining town with an airport and available power and infrastructure in place. The Ossis Lake project, we feel it meets all the criteria for a viable rare earth project. You know, we think that, you know, for a viable rare earth project, you need the grade, where we have grades up to 49%. Mineralogy, the mineralogy is very important because all of our rare earths are contained within one mineral monazite, and the composition, we've got about 23 to 25% of the grade is critical rare earths, neodymium, praseodymium, dysprosium, terbium, and the location is very important because as it was mentioned here previously, rare earths comes with radioactivity. We're likely to be in Saskatchewan, where there's a good mining jurisdiction, and they understand the radioactivity and all this, since, as you know, Saskatchewan produces over 20% grade uranium. So, and the other thing which is important is the processing facility. As of last year, August last year, the Saskatchewan Research Council a Crown Corporation has announced that they got funding from the Saskatchewan government to build a processing facility in Saskatoon. So we think that there's a lot of synergies between Appia's monazite production and the processing facility that is in the same jurisdiction and in the same province. So we think that there's quite a bit of synergies and quite a bit of upside for us. Now, as I mentioned before, grade is king. Here's a chart with the global rare earth projects average in situ total rare earth grades, weight percent. You can see the red here is Appia's Alces Lake. It's about 16.65% weight percent total rare earths, and it ranks second in terms of grade. So that's very crucial, because what has happened in the past when the prices of rare earths are going up, a few companies go in and get all into production. They get all excited, and then when the prices come down, especially in the space of rare earths, where China controls most of the supply of rare earths, then basically companies go bankrupt. And so we think that Alces Lake, with a grade like that and simple mineralogy in the right location, could potentially be a viable project, and we can withstand the ups and downs of market prices. Again, we talked mineralogy is very simple. 100% of our rare earths are in monazite. You can see some monazite right on surface, very concentrated. Composition 23 to 25% critical rare earths. Very important, because the critical rare earths have about 85% of the total dollar value from the rare earths, from the total rare earths. So the mix of the rare earths is very important. You got to have the critical ones. Otherwise, the numbers don't work, dollar numbers. Again, processing facility, as I mentioned before, SRC are started to build a facility. It should be operational. They want it to be operational by 2022, and they do have a lot of experience in processing rare earths. This is a pictures of their pilot plant that they have been operating for a number of years. This is our zone. So on the high grade area of the Alces Lake, we've got 7 zones. They're all either on surface or within 10-20 meters from surface. The grades run anywhere from 8.7% weight percent total rare earths to about 32%. Some pictures of the monazite right on surface. The Ivan zone has 85% monazite right on surface, 53% total weight percent total rare earths. The Dillon zone, we were looking at sort of here, 57% monazite, 35% total rare earths. We have been exploring there for the last 3 or so years. One of our drill holes here, you see the core. We hit 16% weight percent total rare earths over 15.5 meters, and that this included like 49 weight percent total rare earths over 3.7 meters. So this is within 8 to 10 meters from surface. Very high grade, extremely high grade. The exploration that we did last year, it was a limited exploration due to COVID. We discovered we drilled 11% rare earths. In addition to that, we hit 0.025 weight percent gallium oxide, and and we believe this is, we're doing some studies now, this gallium is within the monazite, and you know, gallium is another critical material. Actually, it's more critical than the rare earths because China supplies more than 90% of the world gallium, and gallium is used in a lot of high-tech applications. So if China stops supplying gallium, then a lot of tech companies will have issues. We know this is a large system, as I mentioned before. We see 74 occurrences over 45 kilometers. We only looked at a very small area. With drilling last year, we expanded the zone to 875, the mineralization to 875 meters. We intersected the monazite, the mineralization 340 meters down from surface, and it's open all directions. Within a couple of parallel zones here, so we're quite excited. The high grade zone we're able to expand it to about 145 meters. So and we've tried some AMT surveys, some ground geophysics, and we think that those will be able to help us to explore further. Now for this year, we're starting to do bench scale metallurgical testing at SRC. We want to basically test the physical separation of monazite from the host rock, separate and produce isolate uranium oxide, and also extract the gallium oxide, produce a rare earth carbonate, and eventually produce neodymium and praseodymium oxides. We're also we have 3 different independent consultants looking at our geological and geophysical data for some further assistance in interpreting the geophysics and the geology there. And we have planned for May, June, we plan a property-wide airborne magnetic and EM survey. We're doing ground radiometrics, so we're doing AMT surveys, and we have at least a minimum of 5,000 meters of drilling, which is for when we're drilling here shallow holes is a lot of drilling. And we also have hired a new project manager, Nicholas Guest, who has worked extensively with at the Musselwhite mine with Goldcorp and Newmont, and he was very successful in increasing the annual reserves there at the mine. So we were quite excited about this this year's exploration program. Just a few words. Appia has a huge resource, uranium resource, and rare earth resource in Elliott Lake, Ontario. The resource there in terms of uranium, we've got about 55 million pounds in terms of infer and indicated resource, and about 180 million pounds of rare earths in a 4301 category. But we're viewing the Elliott Lake project as a call on uranium and rare earth prices. So, and also we do have a huge historical resource that we can expand the resource at Elliott Lake. We got our share price right now is around 68.70 cents. We got about 92 million shares outstanding, and about $5.5 million in the bank. Management and directors own about 30% of the shares. And this is sort of a appendix just for the PowerPoint. So I'm basically done. For any questions, we can take them either now or later.
Well, we'll do it later, Mr. Drivas. Thank you very much for your presentation.
Thank you.
Just like to comment that the 70 cents on your stock is the highest of the last 5 years. So
Well,
trading 22 million at
we know we're to 80 cents, but I think it's been behaving well recently, so which is we're happy.
okay, very good. Thank you,
I have
Peter.
I have a comment, not a question.
Go ahead.
One of my pet peeves is people who misuse the word historic. It's a historic 43-101. It's a historic. If it were historic, they would have kept the damn property. What they mean is historical. And Tom is one of the few people who uses the word correctly. So thank you, Tom.
You're welcome.
Thank you, Peter. We're gonna move up to our third presenter, mon ami, our friend, Mr. Peter Cashin.
Just before that, Tom, you have to stop to share your screen.
Yeah, I know. I gotta get
Oh, okay, perfect. Thanks. Okay,
Yeah,
Mario, go ahead. Sorry.
now I get out here.
Yeah, you have to stop.
Stop share.
Okay, let's see.
Top of the
It's,
screen.
If I escape, let's see, escape here.
No,
Okay.
it's not an escape. It's you have to go already on the bottom of your screen where you share screen. You have just beside that. You have to stop.
Okay, share screen.
You have a stop beside it or close to that.
Chat more. Hold on. Okay. This thing is playing games for me. Is that
Okay, perfect.
done?
Yeah, it's done. Thank you,
Merci. Thank you.
Welcome.
Peter. If you want to share your screen now.
No, you have to allow me to share my, there we go.
Yeah, you can do it now.
All right. No, it says I cannot share the
Oh,
screen
just a second.
because you've got something up yourself.
Oh yeah, yeah, Tom, your screen is still there.
Yeah.
Yeah.
Question would be
You're-
that you leave the meeting and then
Okay,
we-
how about
log
now?
back in.
Okay, good.
We still see,
You still see it?
yeah, we still see your screen. Yeah.
Log off and then log back in.
Yeah, perfect, Peter. Tom, just log off and then come back in.
Yeah,
That would be
good
great.
idea. Perfect.
Okay.
All right. Well, thanks very much, Tracy and Mario, for getting Imperial and Scandium into the mix. In answer to Fred Kozak's, before I get into the project and who we are, in actual fact, Scandium is a transition metal. It's really not one of the rare earths. It's compatible, so it likes to mix up with all sorts of things, particularly iron. So it comes out of your magma early on, whereas all the rare earths are incompatible. They prefer to stay in the melt, and they're moved along things like thorium and uranium. So in actual fact, Scandium probably classifies more as a transition metal, like with lithium and titanium and zirconium. Just for a matter of clarification there. Our forward-looking statements and our disclaimer statement, I'll be saying a few things about our projections on moving the project forward. So really, we're focused on Scandium. We do have a rare earth signature related to the mineralization. The particular advantage of the mineralization that we've traced at our Crater Lake project is it contains very, very low quantities of uranium and thorium. And I think that relates to the fact that it is compatible. The uranium and thorium gets pushed away from the mineralization that we have. So we view that the project development will provide us with a near-term sustainable cash flow. It's going to be a very, very small operation. The market is quite small. It seems to be growing. There's a lot of interest, particularly with the recent announcement by Rio Tinto and at their titanium operation in Quebec that they are going to recover Scandium from their waste streams. And they also have the affiliation with the Alcan aluminum division. So they're able to make Scandium aluminum alloys, and I'll run through that a little later. It is all the mineralization we've defined is at surface. It will be open pittable. quite a large system. Our view is that we want to be the price disruptor. That's how you break in as a new player, how you create market share in a growing market. And we're located in Quebec, which is the aluminum capital of Canada. So what is scandium? It's used as a hardener and strengthener of aluminum alloys. It's heat and corrosion resistant. It really has lightweight, high temperature applications in automotive, aerospace, fuel cells, defense sectors. You can imagine the casing of an electric motor of an EV builds up quite a bit of a temperature. Certain alloys, if you exceed a certain critical temperature, the actual alloy weakens, whereas scandium is able to maintain its strength characteristics even at high temperatures in the order of 700 degrees C or higher. Really, we're unlike the rare earths, which are electronics and magnets. Scandium is really has a much broader manufacturing footprint in that it's used as an input for the platforms and all those various sectors. It's really our drive is to reduce the carbon footprint of greenhouse gas emissions, extend EV range by lightening up the frames as well. So the issue has been supply. In addition to being unreliable, generally from Russia and China, the prices have been unsustainable, I think, for broader involvement for low margin manufacturers such as the automotive industry. We view that the tipping point for broader consumption use will be in the order of $1,250 US per kilogram. Now, what you have to realize that the market is slated to grow. I saw that Bloomberg, it's currently the consumption area is about 35 tons per year. Bloomberg estimates that it could be as high as 1,800 tons of scandium oxide per year by 2035. Boston Consulting for the Quebec government, when they announced a financing agreement with the Rio Tinto to help them build their demonstration plant for scandium recovery, estimates that it's about 700 tons by 2025. So all the projections appear to indicate that the market will grow in very short order. These are the players, mostly Australian. We're talking about laterites, which basically is weathered rock, and they get residually enriched. We're truly the only primary hard rock deposit, and we're the only one, certainly in North America. NioCorp in Nebraska has very, very low quantities of scandium. Let's see if I can change this up here. Pointer options. Okay. Very, very low quantities of scandium, yeah, but they're using a very high price in their financial model, so it looks, it looks quite interesting for them. This gives an idea of the increase. The black bars are kind of like the strength characteristics and megapascals, the strength characteristics of conventional alloys. And if you add very, very small quantities, as low as 0.4%, the red bar indicates a significant increase in the strength of the alloys themselves. And more importantly is the ones that the scandium has the greatest strengthening effect on happens to be the areas of broader consumption use, particularly in the aerospace, for wing structures, the automotive industry, for basically fuselages and planes, and then in the defense industry. So what are the cost innovators? The drivers, Dieselgate. All the automotive manufacturers, particularly the Europeans, were going down the route of diesel engines as a means to reduce greenhouse gases. We know that Dieselgate hit in September of 2015, and they had to reinvent the wheel. So they realized that the only way that they could get themselves under the incoming EU emission standards was to go full EV. And we know that Volkswagen alone is dropping about $81 billion from now to 2023 to deliver 20 new all-electric vehicles in their product line. Now, so because it's a strengthener and a lightweighter, you can use it for spot welding, chassis parts, wheels, and suspension components. So by lightening up an EV, you can get the same effect in terms of increasing range as you could by changing your battery chemistries. And for automotive manufacturers, they're more comfortable with, we don't know motors. I mean, that's changing and they're building motors. I mean, Tesla's a good case in point, but they know how to, the heavy manufacturing, they know that if they have a material that will lighten up their chassis, they'll get greater range, they're all for it. The other area is lightweighting, of course, is just as important for combustion engines and improving fuel efficiency and lowering greenhouse gases. And if you take a look at the projections on EV use, as much as 7,500 tons of scandium oxide per year, just for EVs alone, are potentially could potentially be consumed in just the EV space. It's important. It's also an important component for lightweighting of airframes. Airbus has patents on what they call scalum alloy, which is a scandium, aluminum, magnesium alloy for both welding material. So they're using welds now to replace rivets and just in assembling the plane. And that has the effect of lowering the weight by about 20%. And it also has an equal savings in terms of fuel consumption over the operating life, in the order of about $10 to $15 million NPV over the operating life of a plane. Another really exciting area, and that's the one that we're really pursuing, and certainly in our R&D initiatives and the outreach with manufacturers and in the defense sector, is scandium aluminum alloy in powder form as an input into laser melt 3D printing. Laser melt 3D printing is, in terms of what it can do, is makes complex parts. It can make parts that don't need to be machined before they're inputted into the platform. It's a big weight savings. You get a nice strong part. You can put cooling channels, manufacture cooling channels within the part itself. And Boeing estimates that they could save about $3 million US per aircraft by using an aspect of 3D printing in the manufacture of their planes. So pretty exciting. And this gives you an idea of the breadth of parts that you can manufacture using 3D printing. It's also, again, on the theme of carbon offsets and reducing of greenhouse gas emissions. As much as 80% of the US population lives on the coastal region. And if they were to undertake much broader offshore wind power production, that basically it would double the current electric consumption energy needs in the United States by having offshore wind turbines. These are huge. That's huge equipment. You see on the left-hand side top. People are standing by just the head of that's a 12 megawatt offshore wind turbine. And I saw that Vestas, the European manufacturer, is now launching a 15 megawatts. So these things are getting to be huge. Not only huge, but they're also very heavy. That nacelle that you see is 600 tons. So any opportunity to lessen the weight of all of the componentry and put less stress on your towers. I mean, those things are 260 meters high. Obviously, it's required. Also, you get much more efficient wind offshore, further offshore than you currently have with offshore wind. Their production, there's a manufacturer in Europe that's looking at floating GPS-located floating platforms of these wind turbines. And they need a light corrosion-resistant material, strong corrosion material to support those platforms. Scandium aluminum certainly fits the bill. We know that Quebec is the aluminum sector of Quebec. It produces 90% of Canada's aluminum and 60% of North America's aluminum. There are significant fiscal advantages for the development and the processing and third-order processing of materials, metal materials in the province. The driver here is there's so much aluminum production because of the very low hydroelectric rates in the province, in the order of about 3 to 5 cents a kilowatt hour. Can't be beat. It's the lowest rates in the world. So there's our project. We're up in northeastern Quebec. We're about 95 kilometers off the end of the Trans-Labrador Highway. We're near hydroelectric power, road, rail, as well as these red dots illustrate to you the major manufacturers of aluminum along the north shore of the St. Lawrence. So natural synergies between a product that strengthens aluminum and aluminum manufacturing itself. So there are two routes to get product to market, either direct, once we get into the Trans-Labrador Highway system, to get it down directly by road to Baie-Comeau, where there's Reynolds, the older Reynolds aluminum manufacturer, or road and then rail down to Sept-Îles, where there's a huge aluminum plant in Sept-Îles, the Alouette plant. So that's what it looks like. I said that scandium is compatible. It particularly likes to mix up with iron. So commonly you're going to find scandium associated with iron-rich minerals that tend to be magnetic. So that is basically a magnetic map that shows this nice onion skin, undeformed onion skin, intrusive complex. It's really related to rocks that contain the Strange Lake heavy rare earth element deposit, which I discovered in when I ran Quest, and the Voisey's Bay nickel copper mine on the east coast of Labrador. Just to put it in the context, that little magnetic structure is 6 kilometers in diameter. The orange and red that you see on this image is the host magnetic horizon that hosts the scandium and rare earth mineralization. The complex is 6 kilometers in diameter. We've now traced the magnetic horizon that contains the scandium for about 14 kilometers in strike. And we've done a lot of surface work. We've done testing. And just today, we announced that we're launching a $2 million exploration program to drive the project to not only coming up with a 43-101 resource estimate, but we also intend to deliver a PEA to the market, just to give an idea of order of magnitude financial market. Just to put into context, this is the target we intend to undertake the resource drilling this coming winter. This is about 1 kilometer in strike length, and we've drilled it over drill core lengths in the order of 75 to about 150 meters in length, true width about 120 meters. So we're talking about a large target, and that's where our focus is. And to give you an idea, here's the intersections. Just to put it into context, about 200 ppm scandium is considered economic threshold. You can see that we have significant strike lengths across the host horizon. If one assumes about an $1,870 US per ounce gold equivalent, those kinds of numbers represent, in terms of scandium, using a $1,250 US per kilogram. Those intersection grades are in the order of 6 to 11 grams per ton gold equivalent. So if we were a gold company and we were reporting 120, 150 meters core lengths of those kinds of grades, we wouldn't be a 22-cent stock right now. This is the drill pattern. We intend to drill about 3,000 meters to test the entire length. Really, to satisfy a 25-year financial model, we only have to define about 10 million tons of resource grade to satisfy that model. So we're about to mobilize crews. We're likely going to complete the drilling by sometimes in April. Our intention is to deliver on a resource estimate, 43-101 compliant resource estimate in May. We're also completing the metallurgy, which we've been working on now for several years. And we're in the process of finding a solution to recover the scandium effectively, cost-effective method. And it so happens that byproduct bulk rare earth concentrate could be potentially available as part of the operation. We can recover an amount of the zirconium, and we do actually have some titanium that can be recoverable. We're not going to estimate the value contribution of those byproduct materials, but it's nice to know that they're potentially there for us to reduce our operating expense for the operation. So the PEA itself should be delivered sometimes end of the mid-year or beginning of the third quarter of 2021. So really our drive is we want to be the North American scandium supplier. As a matter of fact, we want to go a little bit further downstream. We don't think that the business of scandium production makes money by delivering oxide. We want to go a little bit further downstream, and it's our intention to produce what they call master alloy, which is 2%, an alloy of 2% scandium and 98% aluminum. And that's the base material that all the manufacturers use for their different categories of and classification specifications of scandium aluminum alloy. So we're in the process of doing this. We're doing strategic R&D and platform initiatives both with industry and academia, which we should be in a position to launch fairly soon. We want to create some market pull, and certainly the Rio Tinto announcement in May is there. So all of a sudden there will be a supplier of scandium aluminum to the market. It'll only develop a need profile on a market pull for that material. We want to be the price leader, so we're going to be open pittable. We're only talking a mining operation that'll be producing about between 350 and 400,000 tons of material per year. Because the scandium is related to magnetic minerals, we can actually do magnetic concentration on site. Most of the heavy metallurgical processing will be done on south, near one of the aluminum centers where cheap hydro is available and a very able workforce as well and better infrastructure. We want to be the reliable supplier. We're developing really part of our plan is developing a recycling plan whereby we ensure quality assurance of material that we take back and then redeliver to clients via blockchain and digital tagging of the material that we put out into the market. So really, this speaks perfectly to what the Quebec government wants to see for critical metal developments in the province, which is promoting a circular economy. So in terms of our advantages, we've got a large high-grade surface scandium and rare earth resource inventory. I think our mineral inventory, non-43-101 compliant, is in the order of about 30 to 40 million tons. And like I said earlier, we only need 10 million of 43-101 resource to satisfy a 25-year production model. It'll be a very small footprint, about 300,000 to 400,000 tons of mining per year. Because of the low content of uranium and thorium, it has very low, or mitigates the environmental impact on the project. The mineralization to date is showing to be processed using simple metallurgy, low overhead and projected expenses. I think will allow us to be the price leader in the space. We're in a mining-friendly jurisdiction. We're in aluminum capital of Canada. We've got very strong relationships, long-term relationships with local Indigenous communities. And we have a management and board of people that have been in the critical metal space and have a record of discovery and development in that area. And as was mentioned by Fred earlier, I think the big driver is the U.S. trade war, certainly COVID and the crimping of personal protection equipment for our healthcare workers has really shown that the global supply chain model is failed, and that I think there's going to be a drive for the establishment of domestic or continent-based supply chains, and certainly. Us being Quebec and next door to one of the biggest consumers of this potential material would be to our net advantage. So with that, I'd like to thank you very much.
Thank you, Peter. Merci. Just like to comment that recently, Peter, we saw the IPG, the Imperial Mining stock, rise with good volume. I think you did a financing. You announced a $2 million exploration program on Crater Lake. Am I correct?
Yeah, we've did two private placements, one that we closed in December, middle of December, and another one we just closed in January. Plus, I mean, we've got a lot of warrants in the 5.5 cent to 11 cent range that are also being exercised right now as we speak. Actually, we're seeing more money incoming from exercising warrants than we're spending on operations. So we've got a very, very strong working capital position. We've got about $2.85 million of working capital available to us. And our projection on the exploration program, 2 PEA is about $2 million. So we're in pretty good shape financially.
Oh, excellent. Wow. Awesome. Okay, very good. Now for the question session, I'm going to leave the mic to Frederick. Frederick, I know you have some question for each of the presenter. And
Yeah.
If any member of the panel after Frederick have some question, Frederick will guide you to the right person. And then after we'll fall over with the panel talking about and introducing some political level question. Thank you very much, Frederick. To you.
Okay, thank you, Mario. So we'll go with you first, Peter. Just a couple of quick questions for you. One is a little bit in the area of sensitivity around any issues in this part of Quebec with the Indigenous peoples, and talk to us a little bit about how you've worked with them and managed that process, please.
Well, first of all, Fred, thank you for the question. Our property, as well as the Strange Lake Heavy Rare Earth Element project, is located into James Bay in northeastern Quebec land. So all the land claims were settled as a result of that agreement between the Quebec federal governments and the Indigenous communities. And there's a fairly transparent protocol with which to seek out and get approvals for our working permits. So that's pretty well ironed out. And that the relationship that I built really was when we took Strange Lake right through to pre-feasibility. We had to do a lot of community consultation. And so I developed some very, very strong relationships. I mean, most of my career has been in the northern part of the country, where you're more apt to meet up with Indigenous communities. And I found it important to have them as supporting stakeholders in anything that we do. So I think that'll be to our net advantage.
That's great, thank you. Just one more question, maybe a little bit on the blue sky side. As you're moving through to PEA, have you given any thought to what sort of a timeline might be for you to scope out when you might see first production from this asset?
Yeah, the PEA is likely going to be delivered, like I said, in July or August, and if assuming a full funding envelope right through the feasibility, I think we'll be in a position by late 2024, early 2025 to deliver first product.
Great, thank you. I just have a couple more questions for each of the other presenters. Tom, from Appia, for you, there's one from the chat group here. Do you feel the Trudeau government could be a brake on the rare earth industry in Canada?
Well, the way things are going, all governments, the Canadian government and the U.S. government and the Western Europe, everybody's looking for to secure supply for critical materials, because let's face it, if whoever controls the critical materials controls the economy. So there is I don't think how the Trudeau government cannot help the situation.
Okay. And then similarly, the question that I asked Peter for you, as you go through your planning process here, have you given any thought to a timeline as to when you might see first production? And also, what are you thinking about the capital cost, round numbers? I know you can't be precise.
Well, it's if we have it our way, we like to see production or development by 2022 to 2023. Now, our zones, what we have so far, it's either on surface or within 10 or 20 meters. So, we see that more like as a quarry operation. And with the processing facility being built in Saskatoon by SRC, we don't need to build a processing facility. We all need to do is basically mine and or quarry and deliver the monazite. So it is quite exciting. So that way, we want to jumpstart the program, the exploration, and to see if we can really get to a first resource and a PEA, and then move forward. As I said, it's a situation where the SRC they have a facility and they will be looking for monazite, and they don't have their own mining. So being in the same province, same jurisdiction, SRC is licensed to deal with radioactive materials. So there's a lot of synergies. So we think that the Appia project, it's one of a kind, and the location where it is good, and the grade, and the big advantage that we have is basically that we, for at least for the beginning, we don't have to build the processing facility.
So not to put words in your mouth, but SRC is looking to have their facility up and running by the end of 2022.
This is what they have announced. Yes, they started building their construction has started, and they basically said that they would like to have it operational by sometime in 2022.
So would you be looking at potentially being a supplier for that startup date?
We'd like to think so. We'd like to do that. We'll see if we can make it.
Okay, thank you.
Welcome.
Mark Chalmers, one question out of the chat that was asked. Do you have an opinion about the agreement between Lynas and the U.S. government to build commercial rare earths? And would you achieve a similar agreement with the U.S. government for $30 million for funding?
Look, I don't know. I mean, as I said in my presentation, we're kind of late to the party, not even entering into the rare earth space officially until February of last year. So I think we're, a little behind on, all the work that a lot of people had done at securing some of these funding agreements. It is our plan to build a separation facility anyways, even, assuming that Lynas does build a facility in Texas, it needs to be fed. We believe that the economics of the monazite approach that we're trying to take, or we're taking, is robust enough to finance our operations based on the economics of the operations. So yeah, look, and I think it was really more a point that we were just late to the party. If there is other funding that's done by the government, hopefully they'll take notice, and hopefully they'll take notice by us making a rare earth carbonate in 2021 at commercial scale. Nobody else will be doing that. And so, yeah, look, we'll have to see.
Okay, great. And just one more question from me before I turn it back to Mario. When you're talking about rare earth feed for your facility, have you thought about where you might source it from? Obviously, you're getting domestic source from Florida for your first round from Chalmers. What about other sources of rare earths might you be looking for?
Well, look, Chemours, the initial material we have, that 2,500 tons is minimum. They believe they can uprate that 2 to 2.5 times in the short to medium term. There are a number of other potential sources of monazite in the United States, even from heavy mineral sands in the U.S. But look, as we've made progress, basically everyone who has monazite sands around the world has contacted us, and we've had discussions. So we don't know exactly where it will come from, but we know it's out there. And we believe that, you know, people knowing that there's an alternative in the United States at Western standards with our state-of-the-art tailings facilities and whatnot, and their ability to recover the uranium and actually want the uranium is just a great place to be. So watch this space. But as I said, there's a lot of inbounds right now from around the world, and we'll just see where it goes.
Okay, great. Hey, Mario, back to you.
Yes, thank you very much, Frederick. Thank you, guys. Is there in the member of the panel, does anybody have any question? I'm thinking about Terry.
Yes. How are you? I'm just going to put my video here. I was just talking with, thanks for the questions, Frederick, and also Mario. And I'm coming from the other side of this thing about value in the marketplace. You're a public company. How do we value these companies that rare earths? I've been to China, and in fact, in the early days, back in the early 80s, I went to a rare earth plant.
Bayonobo, Terry?
What?
Was it Bayonobo?
It was in Xinjiang province. I can't remember the name now, but it was Xinjiang province. Bottom line is that the rare earth, first of all, American imports a year is about $200 million worth, okay? It's not a lot of money, but obviously it's a value for the money. But coming back, when I visited this in Xinjiang, I remember it was between a soup kitchen and a whiskey distilling factory mix of a plant. I didn't understand what the hell they were doing, by the way. So coming back to this, I'm going to say, I think the strategy really is, mining is not the critical factor here. It's the value that you produce at the plant and value add. And the specs. So who's going to build a plant? And all of them, a central plant whereby all miners can supply their feed, like it happens in the nickel business. I mean, there are only a few smelters of nickel in the world, by the way, and a lot of mine. And the smelter, the refinery, would have the specs for the consumer. I mean, who put the money into this? I'm just looking at the Mountain Pass. I was talking to Gianni earlier. I see Chamath Palihapitiya, our friend from Canada. He wrote a big check middle of last year for $200 million, along with the Silicon Valley buddies for the Mountain Pass project. So I'd like to ask all of you, and separately, the value added is coming from the refining and the products end of it. Then we have investors in Mountain Pass, which is a huge market cap today. And it was a great mine, by the way, in geologically and everything else. But you got Silicon Valley guys into the business. The value of imports in the United States is about $200 million. And I agree, without this, you're not going to have any PCs and electric motors and everything else. So how do we balance this thing out, whereby you can all add value to the shareholders?
Let's start with Mark. Sir Chalmer.
Who's going to take this?
Yeah, please, Mr. Chalmer.
You're talking, should I?
Okay, Tom, go ahead then.
Okay.
Go ahead.
Well, I agree with you that the money, the dollar sign is on taking, not selling the monazite, not selling the raw material, and taking it to the to the end, as far as down as the end product as possible. I think, but also one key factor is you got to have the supply here, right? So there's not really, so far is not much supply in North America in terms of rare earths. critical rare earths. Now we're starting some production and processing. So I think in the next few steps, we can see somebody, either could be SRC or could be a group out of the US that can really move forward this to sort of different levels. And I mean, MP materials for up to now, basically what they're doing is they're mining and they're shipping it to China, right? So now they're planning the next couple of years to build their own facilities to process the rare earths in North America. So I think I think there's going to be groups that will take the initiative to develop the industry here. You guys don't forget that the Chinese bought the know-how, the rare earths. It was developed in the States, and I believe it was General
Molly.
GE, I think, that had the technology, and they basically sold it. They sold it to China, and this is how the Chinese end up with the rare earth technology or industry. So I think it's now that the world is looking at it very seriously, the Western world, I think things will be happening in the next few years.
Okay.
Let me ask the same question differently of Jack.
Okay.
Jack, is it possible to build a toll mill for the rare earths?
Toll plant, smelter.
Or is every deposit so different, everybody needs their own mill?
Use the
I don't think you need the mill. I think you
legacy
need the
system of
smelter. You're talking Jack, sorry. Yeah.
Go ahead, Jack.
when you use the legacy system of solvent extraction, you basically are running large batches and that the time in the system can be months before you get the total separation that you and purity that you want. You cannot just, a month in, you can't say, I'm gonna put another load in here, but it's a different distribution. So you have to have the same distribution throughout the processing of the batch. If the next batch is a different distribution, it'll be different settings, different times. So to be efficient, you want to always have the same distribution because that's what you have modeled. For the SX systems are hundreds of mixture settlers, hundreds of data points taken every few minutes or hours. Today you can do it continuously with sensors, but it's very complicated, and you can't just, yes, you can bring in different materials, but I tell people that ask me that if you're going to do that, you should still make a standard. The problem is here, you have the same situation as in precious metal, platinum group metal refining. People bring you small lots and you tell them they used to tell them it'd be 18 months for the rhodium. Why? Well, because I have to wait until I accumulate enough to run it, okay? And it's the same thing here. Somebody's gonna, and the US Department of Energy has this problem with their coal issue because they're gonna produce small batches of concentrate. And somebody's gonna have to harmonize them like once a year, maybe you so that's the real problem is the front end here of the separation system. It requires some chemical engineering and some serious chemical engineering. I don't think anybody's addressed it. When people say to me, well, I'm going to mix stuff from Uruguay and Pascagoula, Mississippi and Quebec. No, you might do that, but you're going to be producing the highest priced and non-saleable material in the world. We have to look at economics here and chemical engineering, and people aren't doing that. They just, I'm going to run everything. I'm going to have a universal, separation plant. That isn't going to happen.
I'd like to pipe in support of Jack and some of the statements that have been said.
I would like,
U.S. was the leader in the space for rare earth processing and rare earth chemicals and all the technology surrounding it.
Yeah.
But we gave that up. And now the Chinese have been investing hundreds of millions and billions of dollars and provide the capacity to basically monopolize not only the process of getting high quality refined oxide products, but downstream. They're also monopolizing the downstream for the platforms and materials used that everybody wants probably at a price point that's beats everybody in North America.
That's a very good point. Now, I would like you to go to France and say what you just said and see how long you live. Ron Poulenc considers themselves the world's original great producer. Remember, in America, we had vastness from, and we had monazite from Florida, God, 40 years by Ron Poulenc. They built, we Americans didn't process monazite, we processed bastnasite. And so the French at La Rochelle, the world's largest solution plant for all of theirs. You can separate plant as a 9,000 ton a year, 1,800 3 floors. It's fantastic. And so they consider themselves the leaders, and they will tell you, if you can't get away from them, that they taught the Chinese how to do it. How I keep telling people, the Chinese have put in the last 25 years, how many thousands of person years on this kind of R&D. And when I was asked in the Department of Defense, what should we do? I said, here's an idea. Let's steal Chinese IP. Okay, they're all claiming, the Chinese are here stealing everything, how to make tutti frutti bubblegum and everything, all these important things. The Chinese are way ahead of us on this. They have dedicated billions of dollars and thousands of man years. And however, they have focused on only one thing: solvent extraction by the chloride method. There are other ways to do it, but they're very good at this. Linus is a Chinese designed plant. Okay, think about that. So if we're going to do it, I guess we should see what the Chinese are doing and try to do something similar. And that's what we're going. That's exactly what we're going to do. So I'm not disagreeing with you, and I'm it doesn't matter who's the president of the United States. We did not follow this technology, and the Chinese are the world leaders. There's no question about it.
Whereas, Terry, back to your question, I mean, if it was an interesting study by the British Geological Survey, and they looked at the results from all of the rare earth exploration that had been undertaken worldwide between 2008 and 2011. And what they found, that in actual fact, very, very few of those deposit discoveries had any appreciable amount of scandium associated with them. And that's because I think chemically, they tend not to favor being with the rare earths, although you can see some compatibility. They like things like iron silicates, common rock building minerals like pyroxene and amphibole. So, and unlike the rare earths, where, like Jack rightly pointed out, you basically have to run everything through and to get to the value components, because they're so tightly bound in terms of their chemical properties. Whereas scandium is a standalone, it's off on its own. I think it's going to be a much simpler solvent extraction circuit, number one. And number two, really it's an input into something that we do in North America already, which is produce alloys of various compositions in vacuum melt furnaces. We know that technology cold. We do it throughout Canada and the United States. And that's basically what the requirement for producing scandium aluminum alloys of different compositions. So I think there's a distinct manufacturing capacity and IP available to produce scandium aluminum alloys than all the various chemical products required for rare earth platforms.
Mario, let's talk about the gorilla in the room, and that would be our friends at Mountain Pass, who raised a god-awful amount of money. In 10 years, will they be bankrupt again?
So this is the catch in the industry, okay? In this rare earths, scandium, small metals, the high value added, there has to be, first of all, the prices are not very transparent, okay, for the market to evaluate and put a value on this. If you assume that US is importing $200 million worth of rare earths with their own blend of rare earths within the country, so you're producing Apple phones and everything else for billions of dollars. It's a huge value added. So is Apple prepared to guarantee price and volume to the producer? Is Peter is gonna get you scandium value from Bombardier or from Airbus, okay? This is the problem. The industry is missing this link between the mind and the mouse. The mouse is the consumer, takes it for granted that this metal is gonna be available. And this value added mechanism has been lacking. And it's happening in the other markets as well. We'll talk about this at the PDAC very soon. Copper, there's $200 billion of projects, $200 billion of projects need financing. And we know it's going to be deficiency. We know it's going to be depletion and lower grades. Who's going to finance this project? Because the consumer, the smelter, which is the first rank of the financing, not prepared to pay except annual treatment charges. Home Depot is not prepared to pay. Fabricate is not prepared to pay. So this issue of scarcity of the metal is going to come through all throughout. So Mountain Pass may do very well because somebody going to say, I'm going to write a check. Chepa just wrote a check for $200 million, Silicon Valley for Mountain Pass. Okay, but Silicon Valley is not the miner, but he's an entrepreneur. So this is a problem in the industry that the value added of the mine that puts on the table, it's not recognized by the consumer, and the consumer pays. I mean, you go to Home Depot, you pay $10 a pound for copper pipe, for instance, okay, which is copper sells for $20.5. The Mountain Pass may or may not make it. You're right, but what's the alternative?
One more thing here. I think we're going through our evolution right now. I mean, in the next 5, 10, 15 years, everybody, all the governments that want to see electric vehicles. Now, you know, to have electric vehicles running, you need permanent magnets. And to have permanent magnets, you need critical neodymium, praseodymium, critical metals. Now, you got to keep in mind that even China is an importer of rare earths right now. They're importing monazite. They're buying monazite everywhere, wherever they can find it. So there's going to be, if things pan out the way everybody's projecting right now, there's going to be so much demand. And so this thing, all these materials have to come from somewhere. So, even if China wants to supply the world, it doesn't have it, it won't have it, because there will be so much demand and the supply is not there. So I think we're going through a green revolution or something. It's unprecedented what it's going to happen in the next few years. So I think this is just the beginning. People think, we have been used to this cycles, up and down, but we're getting into we have a different situation right now, and I think that has to be put into the equation and into calculation, because I mean, Quebec announced that they want to see all the cars in Quebec running in electric vehicles by I believe, 2035 or something like that. I mean, everybody's looking at it that way. So where is that material going to come from?
So I got one more
But yeah,
question.
oh, sorry.
I
Yeah,
just one more question. Could Tom, Chris, I want you to come in because you do a lot of valuation as well. Tom, Peter, and Mark, how would you value your company? As a mining company, as a gold company equivalent, diamond company because it's scarce, nickel company? How would you value the company?
Well, it's in our case, I guess, in terms of Appia, to value a company, you've got different methods, right? One is by comparison, right? If you look at the market cap of we want to be a rare earth producer, high grade rare earth producer, critical in North America. We want to supply critical rare earths in North America. If we're successful, we got to look at who is actually doing it right now and what sort of valuation they have. So when you're looking at a $5-6 billion valuation on MP Materials, $3.5 $4 billion valuation on Linus, we have a valuation of 40 million. That's, I mean, you got to value on the basis of that, and investors, they have to sort of look at the potential and the upside, and that's what they're, that's an approach to sort of say here. I mean, is this company, it has a chance? Do they have a good product? Are they in the right area? Can they deliver? I mean, I think that's how you value a company like this. It's like, how do you value a company in the technology space? They come in with something new and they've got a few $1 billion valuation the next day, and they haven't produced a dollar, and they have, and there's no chance that they're going to make any money in the next 10 or 15 years. But they still have a valuation.
We're lucky because a member of the panel is actually a mining analyst. So Chris Thompson, step up to the plate.
No, I mean, my comment is around, the onshore, offshore, debate. And the question is, there needs to be a political will, but also an economic and a business will to move stuff back onshore, right? So you need someone like an Elon Musk who comes in and says, yeah, this has to come from North America, and I want it to come from here, because I wouldn't want to rely for any politician for my business model to be successful, right? So something has to be said. I mean, I think that we've seen in the last year a complete failure with this whole offshoring of certain things around vaccines and PPE in Canada. And so, like, from a business standpoint, like, where are the discussions with your companies, with the offtake agreements with the larger companies to have them lock in and commit to, a buy North America type of mandate?
Okay, but that wasn't the question. How do you value a company like Tom's, like Peter's, like Energy Fuels?
Yeah, I mean, well, typically when I'm looking at a company in a space like a rare earth or a diamond or a gold company, I'm focused primarily right now on the comps in their space. So I like Terry's question is about how the company's positioning themselves, because there's a difference between value that someone might give you versus the actual price it is in the marketplace. And that's why I think that's an interesting to say. Right now, you might say that the company should be priced like a diamond player because of the scarcity. But if no one's buying your product, no one's buying your diamonds, then it doesn't matter how you position yourself, right? And that's where I think that supply and demand needs to come together.
I think in answer to Terry's question, we're either a chemical products or technology company, because mining, in the instance of Imperial and Crater Lake, is a very, very minuscule part of the overall production complex. And I agree with what Chris had to say. Technology companies, who would have assumed that Google which was an internet search engine, could become a multi-billion, almost trillion-dollar company. So, and nobody would have, some smart money went into it because they saw the virtues of it. But as a general rule, I don't think anybody could have predicted a Google as an issue to be like a trillion-dollar company in the space of a very short period of time.
If I could add a capital markets perspective as well, being an ex-analyst, there's a couple of drivers in the market. We all know these. They're fear and greed. So we are in a bull market, most definitely, for the rare earth space. And you saw it 10 plus years ago when there were about 250 public companies in the rare earth market, which collapsed. And those companies also collapsed. Projects that are being resuscitated, if you will, they're I'm thinking one project in particular, I can't remember the name. It had $100 million spent on it by the previous owners, and now the current owners are the beneficiary of that. But like most bull markets, I mean, let's face it. Look at all the call them mining companies, for lack of a better word, several years away from having first production. Some sooner, some later. So the market it's imperfect. It's actually, it's imperfect, and it's works on emotion more than anything else. So realistically, how do you value these companies? Well, some companies have a 43-101. Some companies have a PEA. Some companies have announced agreements with processors, ability to take your output over to Norway or to Saskatoon, to the SRC. There's a lot of different components, but I think a fundamental message here to remember is we are on a fear and greed train, and right now the market is going to get frothy because of the fact that we've got a lot of investors are going pile in, but it's only going to be the companies like the companies that are generating cash flow, like Energy Fuels, like Neo, just to name the two that come to the top of my mind, like Linus, of course. Those are kind of setting the benchmark, and all the rest, I think, will be judged by them.
So we're getting close to the end of our time. I'd like to ask a heretical question then of Jack. What if we're wrong? What if the green revolution fizzles out and something else comes along? Is it possible?
Jack? Jack, are you there?
All right, then I open that up to anybody who feels like jumping into that one. What if we're wrong?
Yeah, I'd like to say as a comment, because I did work a little bit with some rare earth company. I did understand that it takes expertise, money, and time, okay, for a rare earth company to develop, because each project is unique. So each project needs to find the process for separation for all the metals and everything. So, and also to reach out to Terry, I was kind of wondering, okay, if we have a rare earth plant in Canada, okay, who's going to finance it? Okay, is it probably going to work with the end user that's going to probably come in? But we seems to have a lots of resource in Canada, but will there be a political will, like Chris had said, that's going to meet with the business? So yes, we are in a bull market. We are starting something. We know that there's an EV race. Rare earths are in demand. We saw the clash with the China, but I'm kind of yes, I believe we are, like starting the trend. But you know what? Like I've said, remember, time, expertise, and money. But how much time do we have on our hand here?
Peter, anything is possible, but I don't see how, somebody's going to push the brakes on this green energy revolution, right? It's just a question of how fast it's going to happen. So I think the automotive companies they have invested billions, and they're investing billions, and some of them they're saying 3 or 5 years down the road they're not going to be building any gasoline cars. So I think the bus, the train has left. It's just a question of how fast it's going to be, at what speed we'll be driving, and that's the big question. But I think because it's this is international, everybody sort of Europe, Asia, I mean China, they've got more electric vehicles than anybody else. For in China, they're not sort of selling them outside. So everybody's looking for that. So I think it's I think the train has left. The green revolution is going to happen. Where critical materials is going to be needed. They are on the upside, and for the next few years for sure. And in terms of the individual projects, there are a lot of rare earth projects around the world, guys, in Canada, the world. The reason they haven't made it into production is because either the grade or the extraction, or they're not economic, right? They weren't economic, they're not economic, and this is why they're not out there producing. Each project is different. When it comes to rare earths, the mining is easy. It's not difficult to mine rare earths. Taking out the rare earths economically, it's more difficult. You've got 16 different rare earths, and if some of these rare earths are within one deposit in 3 or 4 different host rocks, and it is very complex. So this is, for example, in our project, this is why we're saying before we decided to spend any money in this project, we did mineralogy. We wanted to find out where are the rare earths are occurring, and when we found out that they're in 100% in monazite, we got excited. Then there's different types of monazite. There's coarse grain, lower, smaller grain. And in our case, we think we've got a coarse grain monazite, and monazite, it has been. We know the technology for extracting rare earths from monazite is known. They've been doing it for since the 50s. Lynas, taking out, extracting rare earths from monazite. So what I'm basically saying is, there are a lot of deposits out there, but you got to be careful. I mean, investors have to really look at it and look at the specifics and hope that they choose the right one.
So it's 8:30 and I want to be respectful of everyone's time. Tracy, thank you for pulling us all together.
Yeah.
Everybody on the right side of my screen, I miss you all. I'm looking forward to getting liquored with you again at PDAC 2022. Everybody gets a hug, even you, Fred.
Thank you.
Thank you. And back to
Thanks, everybody.
Thank you very much. I want to thank all our sponsors for tonight. Mr. Chalmer, Energy Fuel, EFR on the TSX, Appia Energy, API on the CSE, Imperial Mining, Peter, thank you, IPG on TSX Venture. Also, Tracy, merci beaucoup. Thank you very much. The mastermind in the back of all this, Monsieur Robert Cloutier from CIM in Amos, doing a very good job. Thank you guys on the panel, Frederick, my co-host, Peter, moderator, Terry, Mr. Jack Lifton, Chris Thompson, thank you very much. All very helpful on the rare earth side. MI3 team, thank you. Merci, Silvio, Nick, Teddy, Manny, Steve, thank you. Thank you very much, everyone.
Good
Stay
night, everybody.
safe. We will do this in 4 months again.
Hang in there.
Thank you from France also.
Merci beaucoup and have a great evening.